Welcome to this week's look at the state of the New York City real estate market. This report is for the week of March 25th to the 31st. We'll get started in a moment with the luxury market, then we'll move to the Manhattan market and the Brooklyn market. Then I'm going to wrap it up, give you my thoughts and recommendations for active buyers and sellers. This might also be of interest to you if you are a property owner and you want to know how the current market is affecting your position. Any questions, please post them below. You can always reach out to me directly at Sotheby's. So, what happened last week in the luxury market? Well, there were 30 contracts signed last week. That is 5 more than the previous week. Just one of those contracts was in the luxury category, meaning for a property that was priced at $10 million and above. 17 of those properties were condos, 10 were co-ops, and 3 were townhouses. 21 were uptown, 9 were downtown. The number one contract signed last week was a townhouse. It was 45 West 70th Street. It was asking just under $15 million. It was reduced from $19,550,000 when it was listed back in October of 2020. It actually cycled through 5 brokerage firms before it went into contract just now, last week. It is a 5-story, 20-foot wide house. It has been fully renovated. It includes over 8,500 square feet. It has 5 bedrooms, 4 bathrooms, 2 powder rooms, and an elevator. The basement features a 33-foot lap pool, a gym, and a bedroom. There is a large kitchen on the ground floor. It opens onto a garden, and the house also has a roof terrace. The number 2 contract was the 8th floor at 1125 Fifth Avenue. It was asking just under $10 million. It was reduced from $13,500,000 when it was listed back in April of 2023. It is a full floor co-op, 5.5 bathrooms, 4 bedrooms, and a library. It has a 28-foot living room with a fireplace and a 20-foot formal dining room that overlooks Central Park and the reservoir. It has a 23-foot master bedroom with a wood-burning fireplace. This apartment does need to be renovated. Amenities in this building include a doorman, storage, and a gym. This co-op board does not permit more than $1.1 million in mortgage financing. Stats for last week: total weekly asking price sales volume, $188,355,000. Average asking price, $6,278,500. Median asking price, $5,625,000. Average discount from original ask to last asking price, 16%. Average days on market, 795. Okay. That is it for the luxury market for last week. Pretty impressive. 30 contracts signed, 5 more than the previous week. We're going to move on now, take a look at what happened last week in Manhattan and Brooklyn. Then, as I said, I'm going to wrap up, give you my thoughts, definitely my recommendations for buyers and sellers who are active in this market. If you are an active buyer or seller, you're definitely going to want to stick around for that. Last week, the new supply, 309 properties came on the market. That is down almost 35%. Contracts signed also down 220, down almost 24%. Off market, 156 for the week, up a little over 31%. The monthly view shows 1,678 properties came on the market. That's up almost 10%. Contracts signed up almost 3%, 956, and off-market properties, 538, up a little over 32%. The market pulse is continuing to show us in this neutral, balanced market, really no discernible change from last month or even from last year. This liquidity pace chart at 956 showing the 30-day moving window of contract activity shows us in this, again, very neutral, balanced market. This is definitely an improvement from a few months ago when we were pretty squarely in the buyer's market kind of territory. So it's nice to see us back in this balanced market. It would be nice to see more properties coming on the market, although last week being a holiday week and a lot of people were away for spring break. So that might have had something to do with the overall lackluster market performance in the Manhattan market in general. I'm going to share this chart with you. It is liquidity by property type and by price point. And it shows that the higher end of the condo market is actually doing quite well, while the lower end of the condo market and co-ops just in general seem to be continuing to lag. Now, we're still in the middle of the spring season. This could change. We're going to continue to keep an eye on it, but thought it might be helpful to share this chart with you to give you some additional insights to what is going on in this market. Okay, that is it for Manhattan. Any questions, post them below or reach out to me directly at Sotheby's. We're going to move on now. We're going to take a look at Brooklyn. And then, as promised, I'm going to wrap it up, give you my thoughts and recommendations. Last week, the new supply in Brooklyn, 164, down a little over 21%. Contracts signed also down almost 14%. 136 off-market rose a little over 58%. Again, holiday week, spring break week may have had something to do with this. The 1-month view shows 837 properties came on the market for the month. This is up a little over 13%. Contracts signed also rose a little over 9%. 582 contracts were signed for the off-market properties, 223 up a little over 2%. This market pulse is showing, again, just as with Manhattan, no real change. We are squarely in this kind of neutral, balanced market. I will say, unlike Manhattan, that has been in this kind of neutral, balanced market for a little while now, the Brooklyn market was still continuing to favor the buyers. Up until quite recently, it is no longer really doing that. So you can see from this chart that we are kind of in this neutral, balanced place. If we look at the liquidity pace chart, this 30-day moving window of contract activity, 582. Again, you see that we are in this neutral balanced market. Just as we did for Manhattan, we're going to take a look at that Brooklyn liquidity by property type and price point. So what we're seeing in Brooklyn is that the townhouse market is more or less on trend, and it's the $1 to $2 million condos that are supporting the Brooklyn market. Again, this is some additional information. It probably is of most interest to those folks who are either active in the market, whether they're buyers or sellers, or for property owners who just want to know how this current market could be affecting their position. I'm going to move on now and give you my thoughts, wrap up for you what happened last week, and then I'm going to give you my recommendations for buyers and sellers who are active in this market, or maybe just thinking about being active in this market. Any questions? As always, post them below. Reach out to me directly at Sotheby's. So there were 30 contracts signed in the luxury market last week, 5 more than the previous week. Just one of those was in that trophy category. 17 were condos, 10 were co-ops, 3 were townhouses, 21 were uptown, 9 were downtown. Just as I mentioned last week, it is worth noting that 60 to 70% of all of the luxury deals are all cash. Now, that may be why our market continues to be quite strong. Those folks don't seem to be as impacted by the mortgage interest rates. If you compare what's going on in the luxury market, which is very good overall and does portend well for the rest of the market, it does seem to be a little bit of a disconnect, at least at the moment, with what happened last week in the rest of the Brooklyn and Manhattan markets, right? Because we see that the conditions are balanced and neutral overall in both Manhattan and Brooklyn. We saw that the supply dropped for the week about 35%. 309 properties came on the market. In Brooklyn, dropped 21%. 164 properties came on the market. In Manhattan, we saw the contract activity dropped 24%. 220 contracts were signed. In Brooklyn, dropped 14%, 136. That's a kind of a contrast with what happened in the luxury market, right? Yes, it was a holiday week, yes, and it was a spring break week, but still, it's a contrast. Interesting to know. Don't really know exactly what that means. It's just 1 week, so hard to tell. Not really a trend. Just to me, kind of interesting. We looked at the liquidity by property type. Manhattan shows that the higher end condos are leading the market, and the co-ops and lower end condos sales are lagging. In Brooklyn, the townhouses seem to be essentially on trend, and the $1 to $2 million condos are kind of leading or supporting that market. If we look at the price action, let's say compared to last year, which was down about 10% when we headed into this year, the latest data that we have on that is showing that we definitely kind of bounced off the bottom, seem to be rising slowly. We're still waiting for more data, obviously, because our reports that come in on our closed sales, it does take a while to get that, few months. We were off, by last count, we seem to be off by about 6%, but it does seem to be rising. What does this all mean? Well, if you are a seller, it means that if you are a co-op or a lower end condo seller, you may find this to be a little bit more of a frustrating market. And you may find this to be a more price sensitive market. So do keep your asking price within that 5% if you're in Manhattan, or 3 to 4% if you're in Brooklyn, of the sold comps for your property. And do keep in mind that we are kind of in the middle of the spring season. You don't want to waste time on this market, and days on the market do matter to your bottom line. The longer you are on the market, the less money you're going to make. So be sure that you don't miss the spring market, make the most of it, and try to get your deal done as quickly as you possibly can. What does this all mean if you're a buyer? You're in a neutral market. Prices do seem to have stabilized. If anything, they are starting to creep up. Overall, you are probably experiencing more competition. You probably are experiencing less negotiability. A, because you have more competition. B, because you're probably experiencing sellers pushing back more. If they've been on the market quite a long time, maybe they're pushing back less. However, if they have just come on the market and perhaps they have other interests, they may be pushing back a little more. So be aware of that. The inventory is rising, but it is rising rather slowly. We still have time. You may continue to see more inventory. So if you don't see something you like now, wait, perhaps you will see something come on that you do. All right, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.